Good evening, guys. So today we are going to have a discussion on CL4. It is a paper discussion. So today I'm going to discuss about the paper that you were given in July 2021. So before starting the session, let me first give you an introduction to the syllabus and the nature of the paper that you're going to get at the exam. So you know there are 10 main areas in your syllabus, and all these 10 areas have been given the same weight. Therefore, there's no area that you can omit actually. So all the areas should be taken into consideration, and you need to have a thorough knowledge with regard to whatever the topic that you discuss in the syllabus. Apart from that, if you look at the paper structure, you know there are three main sections. So under section A, you get 10 MCQs, and after that when you look at section B, there you get 10 4-mark questions. So altogether there you get 40 marks. So for the first 10 MCQs you get 20 marks. So finally you have the main section where you get 2 questions where they allocate 20 marks each. So altogether 40 marks there in section C as well. So that is the nature of the paper. So when you are answering a paper like this, in particular CL4, now there in CL4 you are aware that it's an open book test. Therefore, you have a advantage already, that is you can reduce the workload, because for certain other subjects, even if you take a subject like CL1 audit and assurance, so there you have to remember so many things. But when it comes to CL4, though it's a theory paper, since it's an open book test, you can reduce the workload because you don't have to memorize most of the things, especially since you're permitted to take the Companies Act with you. Only thing, you should be familiar with the provisions in the Companies Act. You should know how to apply those sections to a given scenario. Apart from that, you don't have to waste your time to memorize it. However, this is not something that you should take for granted. Just because you can take the Companies Act with you for the exam does not mean that you can write your answers at the exam without referring to the Companies Act earlier. So there is a prerequisite. Yes, you can take the Companies Act with you for the exam, but there are so many sections in the Companies Act, so many annexures to the Companies Act. So you should know what section to apply. For that, you have to go through the textbook. You have to go through the previous past papers, and at the same time, you should be familiar with the relevant sections of the Companies Act. And then when you're given a scenario at the exam, you should know how to apply your knowledge to the given scenario. When I'm going through the paper, July 2020 paper, you will be able to see all these questions are based on what you have learnt in the textbook. I will refer to the relevant page number of the textbook. So then you will be able to see none of these questions have been given from anywhere else. All these questions are based on the textbook that you have been given, and at the same time you have to apply the relevant sections from the Companies Act. So that is the approach that we are going to take. So I will go through each and every question that you have been given at the last exam. Then I will refer to the relevant part of the textbook, and then also the relevant section if necessary from the Companies Act, and then the way that you should write the answer. So those are the 3 skills that you need to have. So first you should have a very good knowledge about the subject, and then you should know how to apply the relevant sections from the Companies Act. Then you should know how to write an answer based on the question that you have been given. So let's look at the first question. I will look at the MCQs towards the end of the session. First, let me start with the essay type question, or the questions where you have to write your answers. So MCQs will be discussed towards the end of the session. So let me start with section B, where you get 4 10-mark questions. Right. So let me refer to the relevant question from the paper. Right. Right. Okay. Okay. No, that's suggest. Right. Okay. So now I believe that you can see the questions here. So let's straight away go to section B. So let me start with question number 2. So first we'll read it. Now here it says, now the instructions are extremely important. Instructions are extremely important. Now all these questions are compulsory. So here it says total marks for section 2 is 40 marks. So there you get 10 marks each. Recommended time for the section is 72 minutes. Even they have specifically stated the time that you should spend. Now that is also another important aspect of your exam, because you should be able to write your answers within the time limit given. Now the danger here is, now since it's an open book test, as I said, students sometimes take it for granted. As a result of that, they try to refer to the relevant sections at the time of the exam. Now you can refer to the relevant sections, there's no problem, but if you're going to spend a lot of time to figure out the relevant sections, then it's not a good thing to do at the exam, because when you read the question, you should be able to figure out, okay, so this is the area that has been tested, this is the relevant part of the textbook, this is the relevant chapter, and these are the relevant sections that I have to apply. So then only you will be able to answer these questions successfully. Now, by the time you are listening to this recording, I believe that you have gone through the relevant chapters of the textbook and that you have been able to familiarize yourself with the relevant sections of the Companies Act. If you have done that part properly, then only you will be able to understand this. Therefore, what I would suggest here, before listening to this recording, what you should do is study well, go through the relevant chapters, familiarize yourself with the Companies Act, and then listen to this lecture. You will be easily able to understand my explanations, plus you will be able to answer these questions on your own. Don't listen to my explanations at once. First, you should make an attempt to answer this question. You should make an attempt to answer this question on your own. Have your answer ready. Then after that, listen to my lecture and see where you have made mistakes, from where you can improve it. Otherwise, just because you listen to these lectures and listen to this discussion, you will not be able to understand the subject. So there is a prerequisite. You have to work really hard, be familiar with the relevant chapters of the textbook, know your Companies Act properly, and there are some other materials also that are relevant to your exam, certain gazette notifications. I might be able to refer to certain areas during this discussion. However, you have to make your effort, and after that, as a help, as a guideline, you can listen to this recording. So always do that. Don't listen to it at once. First you make an attempt, and after that you should listen to my explanations. Okay, so let me start with question number 2, part A. Now what does it say? Shani is a member of CA Sri Lanka. So one aspect is very clear. She is a member of CA Sri Lanka. Her Sri Lankan national identity card NIC number goes as, and then the number is given. So what does it indicate? It indicates that she is a Sri Lankan national. She is a Sri Lankan citizen. And at the same time, she is a CA member also. A startup company named ABC Private Limited. That company having an annual turnover of rupees 1.85 million, okay, rupees 1,850,000, has inquired from S, that is Shani, whether she can function as its company secretary. Now, the moment you look at it, you understand the area is with regard to, the area that they are going to test is with regard to company secretaries. So there you should know the relevant provisions that are applicable to a situation like this from the Companies Act. Now, what is the required part? They have allocated 6 marks for this question. So, at the very beginning we learned, so 72 minutes allocated for this 40 marks, altogether 40 marks. So, 72 minutes allocated. So, you should know to score 6 marks how many minutes that you should spend here. So, basically 72 minutes divided by 40 multiplied by 6. I don't think that I have to explain all these things, but time management is extremely important, not only with regard to CL4, with regard to any other paper. So, coming back to the question. So, explain to S whether she has the requisite qualifications in terms of the Companies Act number 7 of 2007 to accept this request. So, that means we have to understand, for you to become a secretary of a company, do you have to possess certain qualifications? Now, one hand with regard to secretaries, there is a relevant provision from the Companies Act, right? I will first explain, I will briefly give you an introduction, then after that we will look at the answer. But I am laying the background for you to understand it. Now, in Sri Lanka, according to number 7 of 2007 Companies Act, it is a must that every company should have a secretary. But for certain companies, for you to become a secretary, you have to possess certain qualifications. Now, you must try to understand. Now, at the exam, they don't give you information for no reason. Unless they try to mislead you, every piece of information that is given at the exam, they are extremely important. Now, for a moment, did you think, why have they mentioned about the annual turnover of this company? What is the reason that they have mentioned the annual turnover? Is it for no reason? No, there should be some reason. So, you should be able to understand at once. Now, before anything else, I must tell you, any person cannot be a secretary of a company, especially if the company's turnover is 1 million or more for a year. So, annual turnover, if it is 1 million or more, then for you to become a secretary of that particular company, you need to possess certain qualifications. Now, that we can look at from the Companies Act, but what I mentioned is not actually in the Companies Act. It is stemming from a gazette notification issued. Now, under the Companies Act, time to time, the minister will issue certain gazette notifications. Now, likewise, under the old Companies Act, number 17 of 1982, there have been a gazette notification issued explaining the qualifications that a person must have to become a secretary of a company. The same gazette notification is still valid even under the new Companies Act, which is number 7 of 2007. Therefore, we need to be familiar with the requirements prescribed under that particular gazette notification. At the same time, we should be familiar with the relevant sections from the Companies Act. Now, as I mentioned, every company should have a secretary. At the same time, now I'm going out of the question also, because I just want to cover certain aspects with regard to company secretaries, because then it will be useful for your exam purposes without limiting myself to the paper. Now, if you are going to appoint a secretary, you know that you have to get the consent of that secretary. So, that secretary's consent must be submitted to the registrar of companies. Now, that is for that purpose, there is a prescribed form, form 19. Form 19 has to be filled, where the secretary who is going to be appointed giving his or her consent to act as a secretary for that company. So, that is something that you have to submit. So, that is kind of an additional information. Now, here they are asking a question whether Shani has the requisite qualifications in terms of the Companies Act number 7 of 2007. One hand, if the turnover of the company exceeds 1 million or more, then there are certain qualifications that you need to have. One important requirement is you should be a Sri Lankan national. Now you should be able to understand why in the question they have mentioned the national identity card number. It should be for a reason. So sometimes you can gather the answer from the question itself. So here they have given the NIC number, that is to indicate Shani is a Sri Lankan citizen, Sri Lankan national. That is important for you to become a secretary of a company. Then since the turnover is 1 million or more, in this instance 1,850,000, that person, the Sri Lankan national, should have certain qualifications. There can be different qualifications. Now, a lawyer can become a company secretary. Likewise, once you become a member of the Chartered Institute, any member of the Chartered Institute can become a company secretary because that is a recommended qualification. So, question says Shani is a member of CA, so that means she has the relevant qualifications to become a secretary of a company where turnover of that company exceeds 1 million or more. So that is how you should answer this question. Now let's look at how it works. So question number 2A, I believe that you can see the presentation slide here. Now I have mentioned the learning outcome. Now sometimes students even look at the learning outcomes. Now the question is set in such a way that the learning outcomes are tested. So try to understand the rationale of any exam. It's not limited to CL4, right? So you have a syllabus. A syllabus is structured in such a way that they can test your knowledge pertaining to certain areas. At the same time, through that syllabus, they try to give you certain knowledge. After giving knowledge, they expect a learning outcome. So the paper will be structured, a paper will be set in such a way that those learning outcomes are tested. Now from question 2A, your learning outcome 4.2.2, you can go to the textbook, there you get the learning outcomes. So under that, this learning outcome 4.2.2 is now tested here. If you want to get, before answering the question, read pages 73 and 74 of your study text. Go to the studies text, look at page number 73 and 74 with regard to company secretaries, and after that see whether you can answer this question. So, and then you need to look at section 221 of the Companies Act. Section 221 of the Companies Act. So that is another important aspect when you are answering this question. Right. So here we have to refer to section 221 of the Companies Act. So anyway, let's refer to the Companies Act now. So section 221. So here, let's see 221 of the Companies Act. Yes, so you can see secretary, every company shall have a secretary. So it's a must. No person shall be appointed as a secretary of a company unless such person has, in the prescribed form, consented to secretary of such company. So that is where I said you have to submit form number 19. Right. Then, unless the articles of the company otherwise provides, the board shall have the power to appoint or remove a secretary of the company. That's another area. Now, normally when you appoint an auditor, that must be done by the shareholders of the company. But when you are appointing a secretary, that can be done by the board of directors. Shareholders don't have to appoint a secretary. the board of directors can appoint or remove a secretary that they have. Now look at section 222. The secretary of every company having a turnover or stated capital of an amount prescribed under this Act shall have such qualification as may be prescribed, having regard to the nature of the duties the secretary will be called upon to the discharge. So, now the secretary of every company having a turnover or stated capital of an amount prescribed under this Act. Now, how have they prescribed it? Under a gazette. Actually, that gazette, as I mentioned, has been issued under the old Companies Act 1982. The same gazette is still applicable. Accordingly, if the annual turnover of the company is 1 million or more, then that secretary should have certain qualification. I told you that person has to be a Sri Lankan national, Sri Lankan citizen, and at the same time, he or she should possess certain qualification. One such qualification that is recognized for you to become a secretary is a CA qualification. So, if you are applying this knowledge to the given scenario, you can see very clearly, that this person, Shani, according to the question, can be a secretary. Why? Because she is a Sri Lankan national bearing NIC number, whatever given at the exam in the question, and then she is a CA member, which is a recognized qualification for you to become a secretary. Why you have to possess these qualifications? Because your company is having a turnover which is 1 million or more, then these requirements must be met. So let's look at the main elements of the answer. So you can see ABC has a turnover of rupees 1 million or more per annum. Firstly, Shani must be a citizen of Sri Lanka. As Shani holds a Sri Lankan national identity card, it is obvious that she is a Sri Lankan citizen. Therefore, she possesses the first and foremost qualification necessary. So, the first condition is satisfied. She has to be a Sri Lankan citizen. That condition is met. Then you need to possess a certain qualification, such as being a lawyer, being a CA member. So, here Shani is a CA member. Therefore, that condition is also satisfied. So, you can confirm the fact, answering the question, yes, Shani can become a secretary of this company due to the reasons that we have explained here. So, being a member of CA Sri Lanka is one such prescribed qualification. Since Shani is a member of CA Sri Lanka, she possesses the second qualification criteria. Therefore, considering the fact that she satisfied both prescribed criteria, she can accept the request of ABC to become its company secretary. So, this is how you should write the answer. Then another shortcut that I am explaining here, because at the exam, for you to save your time, now I refer to the relevant section. You can take the Companies Act with you. You have to look at section 221, in particular section 222 here. So, there you go to the Companies Act and you know that you can write notes on the Companies Act. You can highlight, you can underline, so you can write marginal notes there. So, go near section 222 and you know normally you have to carry the Companies Act issued by the Publication Bureau. Normally that is a recommended one, especially if you are going to have a physical examination in the future. Otherwise, I think you can have the soft copy of the Companies Act, but always better to have a hard copy with you. Go to the Companies Act, go near section 222 and write down the relevant gazette notification referred to in the page number 73 and 74. So, there is a particular gazette issued for this purpose, and there are certain qualifications prescribed. So, those qualifications you can write down near section 222. So, then at the exam, you know section 221 or 22 are the relevant sections, 21 and 22 are the 221 and 222 are the relevant sections. So, you go there, and when you go there you see, okay, these are the prescribed qualifications. So, you can look at that part and apply the relevant parts to the given scenario and you can complete your answer. So, your life is very easy, right. Then let us look at the next question also. Now, it says Geeta is the company secretary of Brown and Parler Limited, short form BP, a company incorporated in Sri Lanka. Carly Brown, an American citizen, holds 45% of the issued share capital of BP. Last week, BP purchased a land in Colombo. Under the Land Restriction of Aliations Act number 38 of 2014, Geeta, as the company secretary of BP, has a duty to submit certain information documents to the Registrar of Lands. Required, explain what these information or documents Geeta has to submit to the Registrar of Lands are. 4 marks allocated. Now, if you have gone through the textbook, it's obviously there in the textbook. It's just a matter of applying that knowledge here. Easy 4 marks actually, I must tell you. It's not from the Companies Act. It's stemming from the Land Restriction of Alienation Act number 38 of 2014. Now, but let me explain the meaning of this meaning of this provision. You know, when a foreigner wants to invest in Sri Lanka, there are certain restrictions. They cannot invest in any company, any industry they like. There is a gazette notification issued for that purpose. Accordingly, there are certain prohibited areas. There are certain restricted areas. So where they can, they can invest in the company. However, they cannot purchase all the shares of the company. Now, you must be familiar with those industries. I will come to that because under MCQs, that kind of questions are highly examinable. Therefore, you must be familiar with gazette notification, which explains, so what are the areas or the industries where foreigners cannot invest. We call them prohibited areas. And then there are restricted areas. You can invest, but there are restrictions with regard to the shareholding, and then there are limited areas also. So anyway, now answering this question, like we have certain restrictions for certain industries, at the same time, now the question is very clear. This person is an American citizen, has only 45%. Like there are restrictions to invest in shares of a company for a foreign national, there are restrictions for them to invest in lands of the country. Now, they cannot directly purchase they cannot directly purchase lands in the country. Therefore, they may try to purchase lands or properties through a company that they have invested in. Now, in such situations, the foreign holding of the company should not exceed 50% if you want to acquire a land in Sri Lanka. There is a restriction. So, if you are the company secretary, you have to confirm that the foreign shareholding of the company doesn't exceed 50%. Here it's 45%. Therefore, this company can purchase this particular land in Colombo, but you have to confirm as the company secretary, this is the share structure of the company. 45% foreign national, but balance 55% owned by the local people. Therefore, they have the right to purchase, as the company, they have the right to purchase a land in the country. But after that also, now sometimes it can happen like this. Now, since they want to buy a land in Sri Lanka, they may initially have a share structure where the foreign shareholders have 50% or less. They have less than 50%. So, there is no controlling interest in the company. After purchasing the land, then they can try to increase the foreign shareholding, because now you have bought the land. Because at the time of purchase the land, the requirement was satisfied. The foreign shareholders did not have 50%. Now you have bought it. Now when you purchase a land, you have to write a deed of transfer. And that deed of transfer must be attested by a notary public, and the notary public has to send it to the Registrar of Lands for registration. So at the time of registration, now the land has been purchased by the company. Now you have done a deed of transfer. The deed of transfer has been sent for registration to the land registry. So the land registry, the registrar of land will see, okay, there's a foreign shareholding in this company. There is a restriction for such companies to acquire lands if such shareholding is more than 50%. So the company secretary has to confirm, no, you don't have to worry because the foreign shareholding doesn't exceed 50%. So you have confirmed it. Therefore, the registrar of lands will register the land. But one may try to, avoid this requirement by increasing the shareholding after purchasing the land. Now you have bought the land. But after purchasing the land, what if you issue more shares to the foreign shareholder? Then the foreign shareholding percentage exceeds 50%. Then there is a problem because the whole purpose of this provision is to make sure that foreigners don't get the opportunity to purchase lands in the country, even individually or even through a company where they have control. That's the whole purpose. Because of that, even after registering the land, every 6 months, the secretary of the company has an obligation to communicate to the registrar of land the shareholding of the company. Because the moment, if the every 6 months you have to communicate. So after 6 months time, if the shareholding, if the foreign shareholding has increased more than 50%, then they will not be able to register that land. So because of that, the company secretary at the time of registration has to confirm that the foreign shareholding doesn't exceed 50%, and after that also every 6 months he has a obligation to inform the registrar of land with regard to the nature of the shareholding of the company, composition of the shareholding of the company. So that is the answer to this question. But anyway, let's look at the relevant parts from the textbook, especially from the textbook and the learning outcome that they intend to test here at the exam. So here you can see this. So the learning outcome, if you look at learning outcome 10.2.2, you will be able to see this is what they have tested here. And then study tax reference, page 189. This is also with regard to company secretaries. It's an obligation of the company secretary. Therefore, we are referring to section 221 of the Companies Act. But the main requirement is the Land Alienation Act. So here, this is how you should write the answer. Documentary proof to the effect that the foreign shareholding of BP is less than 50% of the total number of shares issued for the time being. So at the time of registration, you have to confirm that the foreign shareholding does not exceed 50%. And after that also, inform the registrar of lands in writing every 6 months, commencing from the date of registration of the deed of transfer. From the date of registration of the deed of transfer, every 6 months, the secretary of company must inform the registrar of lands regarding the shareholding composition of the company. Transfer relating to the purchase of land that the foreign shareholding of the company has not exceed 50% of the total number of shares issued by the company during the corresponding period of 6 months. So from the date of registration, within the next 6 months, you confirm that the shareholding has not changed. In particular, the foreign shareholding is still less than 50%. It has not exceeded 50% shareholding of the company. So that is how you should write the answer to part B of question number 2. So now let's look at the next question also, question number 3. So you can see here 10 marks allocated altogether for both part A and part B of question number 2. So, basically, since you have 72 minutes for 40 marks actually, so basically you can spend 1.8 minutes to answer to score 1 mark. So for 10 question, I mean, for a question where they have allocated 10 marks, you can spend 18 minutes. So the maximum time that you should spend to answer a question like this, 18 minutes. So remember, at the exam, if you have to refer to the relevant section from the Companies Act, there also you will have to spend time. So with all that, you should spend only 18 minutes to the whole question. Now let's look at question number 3. So as I mentioned, before listening to my explanation, you read the question, you answer the question, and after that, you can listen to my explanation. Accordingly, if you have made any mistakes, if you have to add more, then you can do that afterwards, right? Okay. Question number 3. Sunil and Nimal, promoters by profession, have incorporated more than 50 companies under the Companies Act number 7 of 2007 Act. Given below is the present situation of 2 such companies. Last week, the only director of XYZ Private Limited, XYZ tendered their resignation letters to the company secretary. Yesterday, at the annual general meeting of PQR Private Limited, its shareholders by ordinary resolution resolved that the company be wound up by court. Required, explain to the promoters whether the act contains ground for XYZ and PQR respectively to be wound up by court in the instances given below. So first of all, you need to identify the relevant area that they are trying to examine. This is with regard to winding up of a company. If you look at the provisions of the Companies Act, there are so many provisions relating to, you can find so many provisions relating to winding up of a company. Now, there are 3 types of winding up mainly. Voluntary winding up, and then winding up by court, then winding up subject to supervision of court. So, likewise, there are different types of winding up. Now, out of those, in this situation, they are referring to wound up by court. Then you should know under what circumstances a company can be wound up by court. Sometimes a company can be wound up voluntarily by the members of the company. But here they are not referring to that. They are referring to a situation how a company can be wound up by court. What are the requirements? What are the circumstances? You have been given 2 situations here. So they are asking whether these 2 situations given here, are they grounds for you to wind up a company by court? So there are 2 situations given. One situation is, in one company, the only directors, all of them have tendered their resignation. So that is a situation, now the company doesn't have directors. You can't run a company, you can't manage a company without having directors. So all the directors in the company have resigned now. Now no directors to manage the company. Is it a ground for you to wind up the company by court? The second situation, at the annual general meeting, the shareholders of the company, they have passed an ordinary resolution to wind up the company by court. Can they do that? Can the shareholders of the company pass an ordinary resolution to wind up the company by court? Is it possible? Is it possible? So this is what you have to look at, and for that particular purpose, obviously, you have to refer to the relevant sections of the Companies Act. Now, it's not directly relevant to this question, in answering this question, but they have used the word promoters by profession. Now, it's nothing to do with this question, but you should know who a promoter is. Now, that is also a term that we use in accounting as well as in law. Now, a promoter is basically a person who takes the initiative to start a company. Any person who takes the initiative to start a company, we call them promoters. A promoter can be a shareholder of the company or a director of the company, but it's not a must for that promoter to become a shareholder or director of the company. But naturally, now normally, these promoters become the shareholders and the directors of the company, but it's not a must. What you need to remember here is they are the people who take the initiative to start a company. Anyway, now let's look at the explanation to this question. Let's look at that. Okay. So here you can see the learning outcome. If you look at the learning outcome that you have been given in your textbook, under your syllabus, here they try to test your knowledge pertaining to learning outcome 6.1.1. This just for your information. Then you have a thorough understanding about the because you need to have a thorough understanding about the syllabus and the 10 topics that you get in your textbook. Then study text reference you can refer to before answering the question. Look at pages 105 and 106, understand it. Then look at section 270 of the Companies Act. After that, you write your answer, then listen to my explanation. Pause the video, then write your answer, read pages 105 and 106, refer to section 270, write your own answer, and then compare with my explanation. Okay. Now, I want to look at section 270 also here. So, let's look at section 270 of the Companies Act. Okay. Here, this is the relevant section. So, if you know where to find the section, you have the Companies Act, you just have to go there and find out what is the relevant section. Now, you can't do that for the first time at the exam. That's why you have to be familiar with the relevant sections of the Companies Act. So, when you are studying the textbook, when the textbook refers to a section, don't be lazy. Open up the Companies Act, go there, then and there, write down the relevant notes near the section. So, now I am just explaining the approach that you should take when you are studying for the exam. So, I mentioned about the relevant section, relevant pages from the study text. You read page 105 and 106. Obviously, there they refer to section 270, and then you go near 270 of the Companies Act, and whatever the summary that you understood from pages 105 and 106, you write here. And at the exam, you have the section, you have the note, the summary. And with that, now you can answer the question that you have been given, right? Okay. So, do you think that it's something difficult? No. But this is something that you have to do before the exam. So, if you prepare yourself for the exam in this particular way, you can easily get through this paper. Not just getting through, you can get good marks at the exam. Alright. Now, a company may be wound up by the court if the company has by special resolution resolved that the company be wound up by the court. Don't you have the answer? Don't you see the answer to the question that we looked at little while ago? There are two situations. In one situation, only directors of the company, all the directors of the company have resigned. Is it a ground for you to wind up the company by court? Still, we did not find the answer here yet. But second situation, the shareholders at an AGM, they have passed an ordinary resolution to wind up the company by court. Ordinary resolution. But here, if you look at section 270 part A, section 270 part 270A, what does it say? You can wind up a company by court, but for that you need to pass a special resolution, not an ordinary resolution. You know the difference between an ordinary resolution and a special resolution. Ordinary resolution is a situation where you have to have a simple majority, more than 50%. But if it is a special resolution, you need to have 75% or more of the votes cast. So basically, you need to have 75% or more of the votes to pass a special resolution. So that is required if you want to wind up a company by court. If you look at the second situation given in the question, they have merely passed an ordinary resolution. Therefore, that is not sufficient for you to wind up the company by a court order. Therefore, you can't do that for the second situation. So you have the answer. What is the relevant section? 270 subsection A. Then there are several other situations that they have given where they can wind up a company by a court order. Since it's a paper discussion, I'm not going to go through each and every part, but I will only gather the relevant parts to answer the question. Now, look at part D. Look at part D, 270 D. What does it say? The company has no directors. All the directors of the company have resigned. Company has no directors. That is also a ground for you to wind up a company by court. That is also a ground for you to wind up the company by court. So that comes under section 270D. So if you look at the first situation of the question, that falls under 270D situation. Therefore, the company can be wound up by court as they have suggested. It's possible, but for the second situation, the answer is no, you can't wind up the company by court, because in that situation, they have only passed an ordinary resolution. They are required to pass a special resolution for that purpose, which they haven't done. Okay, so now let's look at the answer. Section 270D of the Companies Act states that when a company has no directors, it can be wound up by court. Therefore, in the given scenario, the promoters do have a ground to wind up the company through court. So it's possible. You have to give a very confident answer. For you to give a confident answer, you should know the relevant section. If you know the relevant section, the relevant part of the section, then you just apply it and you give your conclusion, you give your answer. Students give vague answers when they are not sure about it, then when they are not sure about their knowledge. So that is quite obvious. If you have written an answer in a vague way, you have not written the answer, you are here and there. You are not specific about your answer. That shows you are not sure about, it shows you are not confident. You are not confident. So but here, if you know the relevant section, okay, section 270D clearly says, if the company has no directors, then the company can be wound up by the court. Therefore, for the first situation, you can give a positive answer. They can do what they have suggested. But for the second situation, it's not possible, because according to section 270A, the shareholders of a company can wind up the company by the court, provided they pass a special resolution, which they haven't done. They have only passed an ordinary resolution. So it's not possible. So that's the answer to question number 3 part A. Now let's look at question number 3 part B. So 6 marks allocated for that. A famous decided case laid down the rule that all decisions of a company must be made with the consent of the majority of its shareholders. This rule results in the minority shareholders often being left helpless. Therefore, to strengthen the minority shareholders' rights, the Companies Act number 7 of 2007 has introduced certain safeguards. Okay. Now they are trying to, but look here. There are 3 subparts to this question. Only 4 marks allocated altogether. So easy marks. You don't have to waste your time. If you know the relevant area, easily you can score 4 marks. Right? State the name of the case referred to above. A famous decided case laid down the rule that all decisions of a company must be made with the consent of the majority of its shareholders. I believe every student who's studying company law must be familiar with this landmark case, which is known as Foss versus Harbottle. Foss versus Harbottle. Right? Now, in that particular case, they introduced a rule called majority rule, also known as Foss rule. But I think your examiner expects you to write the answer majority rule, but that is also in company law, that is also known as Foss rule. But stemming from the case Foss versus Harbottle, Foss versus Harbottle. Now, what happened in this case actually? I will briefly explain what happened. Now, it was a situation where a shareholder of a company, he was a minority shareholder. Then a question arises, who is a majority shareholder, who is a minority shareholder? A majority shareholder is a person who has control over the company. Basically, if a shareholder has more than 50% of the company, we call that person a majority shareholder. If you have less than 50%, actually 50% or less, now if one person has 51%, he is the majority shareholder. If the other shareholder has 49% of the company, that person is a minority shareholder. Alright? So, minority shareholder has no control over the company. So, in the case of Foss, what happened was, this minority shareholder filed an action on behalf of the company. Because he saw that the board of directors of this company, they have been misappropriating the resources of the company. So, some losses caused to the company by the board of directors. However, the company did not take any legal action for that. So, the company has suffered a loss. Now, most of the principles in company law are like, most of the principles of company law were discussed in this case. To understand this case, you must be familiar with almost all the principles of company law here. But the most important principles, separate legal personality. According to separate legal personality concept, you know that the company and the shareholders are not the same. The shareholders are different from the company. Accordingly, if the company has suffered a loss, who should take action? If someone has caused a damage to me, a loss to me, my wife or my parents cannot take legal action on behalf of me. If I have suffered a loss, I should take legal action. No one else can take legal action on behalf of that person, not possible. Likewise, if a company has suffered a loss, then the company should take legal action. No other person should take legal action for that. That means even a shareholder cannot take legal action on behalf of the company. So, in the case of Foss, this particular shareholder, a minority shareholder, wanted to take legal action on behalf of the company. Court held here, you have no right to take legal action on behalf of the company, because if the company has suffered a loss, it is the company which should take legal action, not their shareholders. And at the same time, in the case, it was held that if the company has suffered a loss, the majority shareholders are there to make decisions on behalf of that. company. Now, if you are saying that the board of directors are misappropriating the funds of the company, they are damaging the company, they are creating losses for the company, that can be resolved by the company itself, because the majority shareholders can see that the directors are doing something wrong. So, if they want, they can remove the directors, they can appoint a new set of directors. Therefore, court held here, as a minority shareholder, you cannot take legal action on behalf of the company. If something happening to the company, if someone has caused damages or losses to the company, let the majority shareholders take action for that. Now, that is where we say, in the case of Foss versus Harbottle, they upheld the concept, or they introduced the concept, the majority rule, right? However, later they realized, the law realized, true, the majority can resolve if there is any problem with regard to the company, but we need to protect and safeguard the interest of the minority as well. Now look, I mean, you take a country. In a country, you get the majority. Now in this country, Sinhalese are the majority. Then apart from that, you have the minority community as well. You get Tamils, you get Muslims, you get some other communities and races as well, right? So, now as a country, can we make decisions only based on the opinion of the majority? Now, if that happens, sometimes the minority will be marginalized. Some unfair things can happen to the minority. There can be disputes between the majority and the minority whenever the majority tries to make decisions without considering the interest of the minority. So then there can be disputes. Therefore, in company law, we have certain remedies available to the minority shareholders. If the law says that the minority interest has been prejudiced, unfairly prejudiced, if their rights are not protected, under the Companies Act number 7 of 2007, we have certain protection we have provided certain protection to the minority shareholders of the company. Especially if you look at number 7 of 2007 Companies Act compared to the old Companies Act number 17 of 1982, we have been able to introduce several protections to these minority shareholders. One such protection is minority buyout. Minority buyout. There can be situations where the majority make decisions in the way they want. Let's say the majority has decided to go for an amalgamation. That means they have agreed to allow another company to take over your company, or else you have decided to, but the majority has decided to merge your company with another company. But there can be shareholders who are not willing. In such situation, the shareholders who have opposed to such decision can come out of the company and can force the company to buy their shares. They can force the company to buy their shares. That is what we call minority buyout. If they are not happy with the decision made by the majority, in that case, they can compel the company, they can force the company to buy their shares normally at a fair price or at the market value, and they can leave the company. Otherwise, they will get stuck in the company if they don't have the minority buyout. So that is one protection available to a minority shareholder. Apart from that, we have earlier it was a common law remedy. That means it was not in the old Companies Act. Now there's a protection available to a minority shareholder. That is what we call a derivative action. Now I told you about Foss versus Harbottle and the majority rule. There they said a minority shareholder cannot take legal action on behalf of the company. They rejected. But later, under company law, we have introduced an exception to that Foss versus Harbottle rule. We have an exception. What do you mean by an exception here? Normally, a minority shareholder cannot take legal action on behalf of the company, but derivative action is an exception where if certain conditions are satisfied, a minority shareholder can take legal action on behalf of the company. Under separate legal personality principle, normally a shareholder is different from the company. A shareholder cannot take legal action on behalf of the company. But an exception to that situation is derivative action, which permits a minority shareholder to take action on behalf of the company. Apart from that, there's something called oppression and mismanagement. You can take legal action for oppression and mismanagement. So likewise, there are several remedies available under the Companies Act to safeguard the interest of the minority shareholders. So state the name of the case referred to above, Foss versus Harbottle. State the name given to the rule mentioned above, the majority rule. List 2 safeguards introduced by the Act to strengthen the minority. So I have mentioned 3. So here they have asked only 2. One is minority buyout and the other one is derivative action. So, and another one, if you want, you can, if you feel that, you can write down that as well, oppression and mismanagement. So let's see. So this is question 3B. Learning outcome 7.1.1. Before answering the question, read page number 123 of the study text, and here you can see the answer. Foss versus Harbottle, majority rule, and here oppression and mismanagement, minority buyout rights and derivative action, as I mentioned. So straightforward, you can easily score 4 marks for that question. Okay. Right. So now we'll look at the next question, question number 4. So Varuna and Bimal, 2 retired classical musicians, have formed a company under the provisions of the Companies Act number 7 of 2007 Act to look into the welfare of retired artists. They have also obtained permission from the Registrar of Companies to dispense with the word limited from the name of this company. Required, explain the type of company that Varuna and Bimal would have incorporated based on the information given above. So they have already incorporated the company and they have been able to take permission from the Registrar of Companies to mention the name without using the word limited. And they have started the company for the purpose of providing welfare to retired artists. Now, we mainly focus on, under company law, we mainly focus on both private and public limited companies where you incorporate them with the intention of generating profits. That's the whole purpose, because companies are basically incorporated with the intention of generating profits. Profit motive is there. But under the same Companies Act, there are certain, there is a particular situation, there is a particular area where you can start a company for no profit motive. That means under the Companies Act, you can actually start companies without having a profit motive. Normally, private and public limited companies, there you have the intention of generating profits. The profit motive is there. Apart from that, if you want to start a non-profit organization, maybe to provide members' welfare or to provide social welfare. Now, if you start a cricket club, a rugger club, or else now even under chartered institutes, so there are certain for students, student welfare organization, staff welfare organizations are there. Now, they don't have any intention of generating profits. Their main objective is to provide either social welfare or members' welfare. So, if you become a member of a, let's say, cricket club, SSC or NCC, or else you have golf club. So, if you become a member there, then you can enjoy certain privileges. Outsiders can't go, outsiders are not permitted. That's why we say members only. Only members can visit the premises, only they can obtain certain privileges and welfare provided under the under that particular club or organization. Or else there are certain other organizations, we call them Lions Club, Rotary Clubs, Leo Clubs, Road Track Clubs, Interact Clubs. Their main objective is actually to provide social welfare. But anyway, it is possible for you to start a company to provide either social welfare or members' welfare without having any profit motive. We call them companies limited by guarantee. In the Companies Act, we have a separate chapter which explains the provisions pertaining to a company limited by guarantee. It explains the situations under which you can start a company limited by guarantee. Now, the moment you hear the word limited, let's say ABC Private Limited, ABC Public Limited. The moment you hear the word limited, you get the impression that this is a profit earning business. But if you are running if you want to start a organization, if you want to start an organization for welfare purposes, there you don't have any profit earning motive. So when you are using the name, the moment you use the word limited, people might think you are a profit motive organization, profit earning organization. Therefore, you can't you can't properly communicate to the society the nature of your organization. That your organization is a welfare organization. Therefore, for such companies, you can use your name without using the word limited, but for that you have to get the approval from the Registrar of Companies. According to this scenario, the Registrar of Companies have given you the approval to use the name of the company, without using the word limited. So that indicates your company is a company limited by guarantee. No other company can avoid using the word limited. Only a company limited by guarantee can do that. So you can see 7 marks allocated. Therefore, you can't just explain briefly. You have to refer to the relevant sections, and from that you have to obtain the relevant parts, and then you have to answer. And another thing is, here there are classical musicians, and you can see they have started this to provide welfare of retired artists. So you need to check, when you are starting a charity, a charitable organization, you can start a charity to promote arts, to promote education, to promote, now in the film industry you get charitable organization and sports. So likewise, there are certain areas identified under the Act where you can start a charity. So you have to see whether, obviously, you can start a charitable organization to promote arts. That is what they have done. Music, arts, education, sports likewise. So that is permitted. So that is what they have done here, and that is why they have been able to, they have been given the approval to use their name without using the word limited. So that definitely indicates it's a company limited by guarantee. So explain the type of company that V and B would have incorporated. So here you can't just say it's a company limited by guarantee. You have to explain why do you say it's a company limited by guarantee. So let's look at the presentation slides here. So again, I'm reminding you, learning outcome 8.1.1 is tested here, and first read page 141 of the study text with regard to companies limited by guarantee, and then look at section 32 and 34 of the Companies Act. Write your answer, and then you listen to my explanation. Right. So I want to show the relevant sections from the Companies Act here. Let's refer to them as well. Okay. Now, this is the part they have allocated to explain the provisions relating to companies limited by guarantee. Any two or more persons may apply to form a company limited by guarantee by making an application to the registrar for the same in the prescribed form signed by each of the initial members. Form number 5 you have to is the application form relevant to companies limited by guarantee, whereas form number 1 is relevant when you are incorporating a private limited or public limited company. That is something additional. So here signed by each of the initial members together with the following documents. So form number 5, along with that these documents must be submitted. These documents actually very much similar to private and public limited companies, articles of association, then the consent of the directors, form 18, then the consent of the secretary, form 19. And then the company limited by guarantee shall have article which set out the objects of the company. Whenever you start a charity, you have to specifically state the objects of the company. First you have to submit the objects of the organization and you have to get the approval from the registrar of companies. After that only you will be permitted to register the company. So it's little different from a private and public limited company. Here first you have to submit the objects of the company with the articles of association, a draft articles of association which includes the objects of the organization. Then the registrar of companies will go through it and then they will provide you with the relevant approval. After that only you can submit the relevant documents to register the company. So that's how normally it works, but you need to go through the relevant text. Here within the limited time period allocated, I will just try to explain how you should deal with the question that you have been given. Now the important part here, section 34. Section 34. So it says, where the registrar is satisfied that an association about to be formed as a company limited by guarantee, it is to be formed for promoting commerce. Here they are not trying to promote commerce, promote art, science, religion, charity, sport or any other useful object. So they are trying to promote art here and intends to apply its profits, if any, or other income in promoting the objects and to prohibit the payment of any dividend to its members. Remember, in a limited by guarantee, it is prohibited for them to distribute dividend. Whatever the profits and or income generated by the organization can only be used to achieve the main objective of the company, that is either members' welfare or social welfare. In this situation, they have started to promote art. In that situation, it is a permitted requirement, plus under section 34A, the registrar may by license direct that the association be registered as a company limited by guarantee without the addition of the word limited to its name. So it's very clear, the company that they are referring to in the question is a company limited by guarantee under section 34 1A. It is clear that the registrar has given permission to do that. So let's look at the answer now. So the Companies Act number 7 of 2007 provides for companies limited by guarantee. These charitable purposes could be summarized as purposes for the benefit of the public or any section of the public in or outside Sri Lanka in any of the following categories: the relief of poverty, the advancement of education or knowledge, activities for the protection of the environment and eco-friendly activities. Now under the Inland Revenue Act also, when you are starting a charity, they have prescribed certain areas that they consider as charity. So here you can see some of those areas that we identify as charities. Advancement of religion or the maintenance of religion, rights and practices, or for any other purpose beneficial or interest of making not falling with any of the above categories. So it's very clear, it's a charitable purpose promoting art, music. So in that case, Registrar of Companies he has given the permission or the license to register the company as a company limited by guarantee without using the word limited when using the name of the company. Further, permission of the registrar to dispense with the word limited from the names of the company could be obtained only for one type of company under the Companies Act, namely a company limited by guarantee. So, after explaining all these things, then you can finally come to the conclusion according to the information provided here, they are referring to a company limited by guarantee. So, you have to explain a bit because they have allocated 7 marks for this question. So, accordingly you have to spend your time and then you have to decide to what extent you should write your answer. You can't just say it's a company limited by guarantee, but you have to explain referring to the relevant provisions, why do you say it's a company limited by guarantee, right. Then let's look at part B of the question. Explain the Act allows V and B to conduct these workshops. Okay, sorry. V and B now intend to conduct drama workshops for differently able children in Colombo. So, they are going to conduct some drama workshops for differently able children. Then a question arises whether they are permitted to do that. Explain the Act allows V and B to conduct these workshops under the same company mentioned above. The company has been started for charitable purpose, for a purpose permitted under the permitted for a company limited by guarantee. So, here also not a profit, I mean here also you do not have any profit earning motive, you are conducting drama workshops. So, you are trying to promote art. So, here you are doing drama workshops, it comes within the object of the company, therefore, and they are doing it for differently able people as a for the purpose of charity, in that case they are permitted to do that. So, let's look at the answer to this part also. So, question number 4 part B, learning outcome 8.1.1 and then page 141 from the even for the previous one, because the whole area is covering companies limited by guarantee. So, section 32 and 34. So, straight away we will look at the answer, only 3 marks allocated. So, then you do not have to write a lengthy answer to this one. Conducting drama workshops for differently able children in Colombo definitely falls under the definition of a charitable purpose as mentioned in part A above. So, it is a charitable purpose, you are not doing it with the intention of earning profits. So, it falls within the objects of the company, it falls within the objects of the the organization. So, the Act allows company limited by guarantee to engage in such charitable purposes, therefore, the company referred to in A above can conduct such drama workshops. So, that is all you have to mention here to get 3 marks for this question. So, that is how you should write the answer to question number 4B. So, now we can look at the next question also, question number 5. Aruni Paul, a final year student of CA Sri Lanka, came across the term corporate disclosures under the topic listing rules of the Colombo Stock Exchange. She seeks your guidance on the instances where corporate disclosures may be withheld for bona fide purposes. Aruni also recently read the annual report of the Central Depository System Private Limited, which is a wholly owned subsidiary of the Colombo Stock Exchange. What do they want us to do here? State 4 such instances where corporate disclosure can be withheld for bona fide purposes. state 6 facilities offered by the CDS. It's very straightforward. Both questions are very straightforward ones, and if you have gone through the relevant area of the textbook, you can easily score 10 marks for a question like this. But if you have omitted this area, if you have not gone through it, then definitely you are in trouble, right? That is why in your textbook you have 10 chapters. All 10 chapters are equally important. There's nothing that you can avoid. There's nothing you can omit. All 10 areas are equivalently important. Now, this is nothing to do with the Companies Act per se. However, in your syllabus, they deal with companies listed in the Colombo Stock Exchange. We call them listed companies or quoted companies. Call them public limited companies. If a company is listed in the Colombo Stock Exchange, we call it a public limited company, a listed company or quoted company. Now, if it is a company listed in the Colombo Stock Exchange, in that case, that company is subject to several statutes, not only the provisions of the Companies Act. Apart from the provisions of the Companies Act, such listed companies are subject to several other provisions. You have the Securities and Exchange Commission Act, and time to time the Colombo Stock Exchange, they issue rules and regulations pertaining to the companies listed with the Colombo Stock Exchange. So you are governed by such rules and regulations. So apart from the provisions of the Companies Act, these companies listed in the Colombo Stock Exchange, they have to comply with the rules and regulations issued by the Colombo Stock Exchange as well. Now, in this instance, they are referring to a situation where corporate disclosures under this topic, listing rules of the Colombo Stock Exchange. So, there is something called listing rules. If you want to register a company with the Colombo Stock Exchange, there are certain requirements to be satisfied. If you have been able to satisfy those requirements only, you will be listed. Now, that is, I mean, we don't have time to go through those listing requirements, but those areas are extremely important for the exam, even though they have not tested here. Now, those listing rules specify these are the conditions that you have to satisfy if you want your company to be listed in the Colombo Stock Exchange. You have the main board, the divisory board. So likewise, so for you to list that company under the main board or under divisory board, there are certain conditions to be satisfied. Now, apart from that, there are other conditions, conditions, other rules that you have to comply with. You have to adhere to those rules and regulations. So here it says, she seeks your guidance on instances where corporate disclosures may be withheld for bona fide purposes. Bona fide means in good faith, for genuine reasons. That means every company listed in the Colombo Stock Exchange, they have an obligation to disclose important information to the general public, because the general public will make their decisions based on certain disclosures that you make. Good or bad, you have a requirement to disclose certain important information. It's a requirement. But there are certain instances where you don't have to make corporate disclosures, but it is only permitted for a genuine purpose. Bona fide purpose. Good faith purpose. In good faith, you can withhold certain disclosures normally required to make. So there are certain information then that you don't have to disclose to the general public in certain circumstances in good faith, actually for the benefit of the general public. So let's look at what are those situations where you are permitted not to disclose certain corporate information in good faith. Then part B of the question, 6 facilities offered by Central Depository System. You know, Aruni also recently read the annual report of the Central Depository System. I believe that you are aware Colombo Stock Exchange is a company limited by guarantee. Colombo Stock Exchange is also a company. It's a company limited by guarantee. Colombo Stock Exchange has a fully owned subsidiary, that is what we call the Central Depository System. It's like a bank. What a bank does, normally a commercial bank, what is the main role? Accept deposits, accept money, and then they provide loans, accept deposits, and from the money that they have received as deposits, and then they lend money to the general public. They lend money to the general public. That is what they do. Likewise, Central Depository System. What do we deposit there? We deposit the shares that we purchase from the Colombo Stock Exchange. So whenever we purchase shares from the company, automatically they are deposited with the Central Depository System. Whenever, so that's why now if you want to, these things you can learn practically. That is how I learned when I was in the university. When I was in the law faculty, very first year, I started investing in the Colombo Stock Exchange. Now, you don't have to have a lot of money. I didn't have a job at that time, but with the little money that I generated, I used to do some classes, and from that money, I used to invest in the Colombo Stock Exchange. You don't have to have a lot of money, because even though you invest 10,000, even though you invest 100,000, even though you invest $1 billion, the procedure is the same. So, what you can do is, you can register yourself with the Colombo Stock Exchange. For you to register yourself, you have to pick a stockbroker, right? There are several stockbrokers, right? JB Securities, then you have John Keel's, they have separate securities. So likewise, there are several stockbrokers registered with the Colombo Stock Exchange. So through a stockbroker, you can get registered with the Colombo Stock Exchange, and when you register yourself to do trading activities in the Colombo Stock Exchange, automatically you open up an account, like you open up a bank account, you open up a stock account with the Central Depository System. After that, whenever you purchase shares from the Colombo Stock Exchange, your share account will, whatever the shares that you purchase will be credited to your account. Whenever you sell, your accounts will be debited. Now they have this facility where they send you the monthly statements. It can be manually, in the sense they can send you the hard copy. Now they send you the e-statement, and apart from that they send you text messages giving you updates. Now every day I receive updates about the Colombo Stock Exchange. So that is another facility actually provided by the Central Depository System. So they are asking 6 facilities like that. So if you have written it down, you definitely get 6 marks. So let's look at the answer to this question. So 5A and 5B. So learning outcome 9.31, study text, read pages 175 and 176. So answering the first part of the question, what are the instances where you can hold corporate disclosures for genuine purposes? Now, while going through the relevant points, let me explain it. First one, when immediate disclosure could prejudice the ability of the listed entity to pursue its corporate objectives, then in such situations, you don't have to disclose the relevant information. Because now, remember, Colombo Stock Exchange or any other stock exchange, if you take them, they are information driven. Information is a valuable asset, but it can harm a society, it can harm a company also. Now, any stock exchange, not only Colombo Stock Exchange, completely information driven. The moment you get the information, this company for this particular quarter has done really well. Profits have increased compared to the previous quarter, previous year, and they are going to give you a lavish dividend distribution. The moment you hear, it's a good information. Now that is a good information disclosed by the company. Obviously that will increase the share price. Forget about that. Now these days we hear a lot of negative, we receive negative information most of the time, maybe with regard to fertilizer or any other. Now there was a time period, we had a major dispute with regard to, major issue with regard to this coconut oil, stating that it includes certain chemicals which is cancerous. So then certain names, certain brand names were disclosed, stating this particular brand name includes cancerous, I mean that coconut oil, that particular brand, that company is selling is cancerous. The moment you hear that information, what happens to that company? People stop buying from that company. So then that company is in trouble. But obviously if they are selling something cancerous, then we have to stop it. But what if some information are there? Now if you disclose it immediately, that can have a major impact on the company. Let's say it's a bank. Yes, there is an issue, but if you immediately disclose it, then people will get scared and they will start withdrawing money from the company. Even though it was a small issue, now since people have started withdrawing money from the bank, people will, obviously the bank will collapse now. So sometimes you have to disclose information, you have to be transparent, that's the whole purpose. Because then only people will be able to make decisions, informed decisions. But you have to do it very carefully, because if the imminent or immediate disclosure, if it is going to have a negative impact on the future of the company, then if the company will not be able to achieve the objectives as a result of that, then for a genuine purpose, since it's a genuine purpose, you can withhold corporate disclosure. Then the second one, when immediate disclosure could prejudice the ability of the listed company to pursue a bona fide transaction that is contemplated. Now here we are referring to a particular transaction. Assume someone is going to take over your company. Your company is going to be taken over. Now sometimes people who have listed in the company, people who have invested in the company may get scared, thinking, okay, now another company is going to take over this company, and as a result of that, share price might decrease. But now in certain circumstances, the share price can even increase. Therefore, it's a very sensitive situation. So until you go through the takeover, sometimes you have to control the information coming out, because sometimes it can be a good news, it can be a bad news. If it is a good news also, it will create an artificial demand for that company. And all people will try to buy more and more shares in the company. As a result of that, the share price can unnecessarily increase. That is also not good. It can be a manipulation, abuse of the market. Therefore, there are certain instances the immediate disclosure could prejudice a transaction that they are going to complete. So in certain circumstances, in such situations, it is possible for them to withhold information without disclosing it. Then, when the facts are in a state of flux, now look at this current situation. We are in a flux, state of flux. What do you mean by a state of flux? Things are changing rapidly. A dynamic environment. Things are changing rapidly. You are in a flux. You don't know what happens next. Within the next few hours, you don't know. Look at the way the inflation of this country and in the world rising. Now, something that you bought for 100 rupees, by tomorrow it can be 120, 140. So, we are in a flux. Things are changing rapidly. If things are changing rapidly, information that we give now may not be valid by tomorrow, because the information that you disclose today, may be outdated by tomorrow. Then you can't make informed decision in a situation like that. So, when the facts are in a state of flux, and disclosure could be counterproductive because you cannot make informed decisions, in that case it can mislead the public and the market, because now they are going to make decisions on outdated information, because things have now changed within a short period of time. In such situations, you can withhold information, you can withhold corporate disclosure. Okay? Then the next one, when the listed entity is holding negotiations with a third party and has not reached an agreement in principle on the relevant transaction. Yeah, again I can take an example like this. You are going for a takeover, you are going for an amalgamation, or else a new investor is going to buy the majority shares of the company. You are still negotiating. You have not finalized it. You have not entered into an agreement. You have not agreed on anything in principle. So, in a situation like that, there's nothing concrete for you to disclose, because things can change again, because parties have not agreed on anything. They have not agreed anything on in principle, and they have not entered into an agreement. In such situations, you don't have to disclose such information. You can withhold such information until you come to some kind of an agreement with the third party. So, those are some situations where you can withhold corporate disclosure for a bona fide or genuine purpose. Then part B, that is where that is where we have to answer the services provided by the central depository system. So, you have to list down 6. We have several here, we go through it. So, what you have to do is, you have to memorize it and reproduce at the exam. So, what you can do is, in the Companies Act, these things are not addressed. However, since you are permitted to write things on the Companies Act, so you can write down these services provided by the central depository system. So, you can go to the Companies Act, you pick some area and you write down the services provided by central depository system. And even the previous one, the corporate disclosures that can be withheld for genuine purposes. You write down them on the Companies Act and you memorize, you remember them, and then you can reproduce it at the exam. So, here dematerialization of all listed securities, that is, dematerialization is a situation where, now if you purchase shares, there is a share certificate. If you purchase debentures, there is a certificate. So, these are physical certificates. Dematerialization is a process where we convert these physical certificates into electronic certificates. Rematerialization is the opposite of that. Electronic forms or electronic certificates are converted into physical certificates. We call it rematerialization. Then clearing and settlement of trades on the Colombo Stock Exchange. What do you mean by that? Assume you want to buy 1000 shares of Commercial Bank PLC. So, through your stockbroker, you place an order. I want to buy 1000 shares, let's say at 85 rupees. So, you place an order. And if someone is willing to sell their shares at 85, then there is an agreement, demand and supply. That is how it works. You demand 1000 shares at 85 rupees of Commercial Bank PLC, and then someone is there who is willing to sell his or her shares at 85. So, there is demand and supply are met. Then that transaction must be cleared. So, within few days the transaction will be cleared, and the buyer must make the payment and the seller must be settled his payment, and that clearing and settlement of trades on the Colombo Stock Exchange is done through the central depository system. Then services related to the change of address. So if you want to change the address, that kind of services are also provided by the central depository system. Effecting transmission of securities. So if you want to transmit your securities to another party, that also can be done. You want to transfer your shares to someone else. So transmission of securities, that is also done by the central depository system. Then provision of monthly statements. I mentioned this in my explanation. So they give you an update. It's like you receive a bank statement explaining deposits, withdrawals, debits and credits, basically deposits and withdrawals. Likewise, at the end of the month, it gives you a statement which shows how many shares that you have bought, from what companies that you have bought, not the values, number of shares, and how many shares you have sold. And then now they provide e-statements also, provision of e-statements to subscribed CDs account holders. Then SMS alert services for subscribed CDS account holders. Then electronic data download facility for participants. So the people who are registered with the CDS, Central Depository Systems, they have been given the opportunity to download certain important materials from the system, from the website. Then electronic download facility for listed company secretaries and registrars. So here for the account holders, and they also have provided this facility not only to the account holders but also to the listed companies, secretaries and the registrars also. Okay, so that is how you should write. It's a straightforward one, because you can't answer a question like this if you have not gone through the textbook and if you have not been able to remember these important services, because you have to just list down. You don't have to explain anything. You just list down 6, you get 6 marks. Even for the previous one, it's the same. You don't have to explain it because they have asked you to list them only. So that's how you should answer this question.